Everybody's been talking silver lately because the price is starting to move a little bit. And, if you're playing a paper game, well, I wouldn't play the paper game mostly, but if you're going to do a little bit of it, obviously you would have made some gains. It's below 30, it's almost to 34. That's a pretty good gain, if you provided you jumped in at the right spot. This is a very bullish article on silver. It's talking about silver, for pie in the sky number. The all-time high for silver was actually reached in the year 1477. In 1477, it's estimated that the price of silver reached the equivalent of $1,050 an ounce in 2010 dollars. And that's from the Resource Prospector, November 2010. So, in real dollars, that's pretty damn high. And, I don't know. I got a lot of suspicion when people start telling me, thousands of dollars of ounce in silver, because I don't trust anything they say, unless they're talking about hyperinflation. If they're talking real dollars and they're telling me silver's going to be thousands of dollars an ounce, I start mistrusting everything they say. That's me. I mean, maybe, I don't know. I sure would love it to be that much too, believe me. But this article talks about, if you look back, he talks about a standard prediction. He's standing by a prediction of $130 an ounce. And $130, $135 an ounce. If you use the real inflation, that's about what it would be coming up. I think it's going to go higher than that. And it's about the debt crisis and what's happening on with the central banks. Same old story and stuff like that. But one thing I want to point out, and he has this chart here. It's pretty good. I mean, the gold. The S&P is way the hell down here. It's practically nothing. Gold, silver, the gold miners. The gold miners are doing great. And, you're talking about over the last 10 years now. Not last year or anything like that. I'm talking about over the last 10 years. The miners have been doing good. And he does say something in here, which I find, sometimes good because it's simple common sense. There's a reason that the phrase gold mine has been so overused to refer to anything with the potential to make you extremely wealthy in a very short order. That company, that restaurant's a gold mine, that company's a gold mine, that racket's a gold mine. Well, the miners are going to do great. And if Eric Sprott is in the silver miners, like Endeavor is one of them, it's going to do very well. I would think. I don't want to steer anybody wrong. I don't have too much of those minor stocks. I had some of that. I got like a little bit of it. I sold some of it off because it made some good gains. It was a while ago. Endeavor. I think it is going to do good because Eric Sprott knows how to make money. And he didn't make his money yet. But just watch the pump and dump. That's the one thing. God, some of these predictions out there are so high. That's why I get really suspicious about anybody. This article went on and said up here, 1477, it is estimated that the price of silver reached the equivalent of $1,055 an ounce in 2010 dollars. I don't know, maybe it could go that high in real dollars. I don't know. But I go a little bit. I can't buy into it too much. I can't. So I take those kind of things with some kind of, store it back there in the information hole. But I also think that, they're pushing something because they're going to dump it before it gets this high. That's what I want to do. I want to hit near the peak. I don't want to be on the other side of the curve. U.S. Mint sales of American Eagle coins were the second highest ever in January 2012, and the biggest year was 2011 last year, January, that month. That was even bigger. The last January 2011 was even bigger than this January 2012. The U.S. Mint reported that it sold 6,107,000 ounces of silver coins last month. That is well within a few 100,000 ounces of 3 previous months combined, and exceeded a monthly basis only by 6,000 422 ounces in January 2011. So they're a little higher back then. Now, what happens is every time they come out with a new issue, there's a lot of sales. That's what it is, because you got the 2012 issue. So a lot of people buy because it's the new year. Promotional efforts at least some dealers who send the fresh silver coins to a grading service to be rated mint state, even though they have already in this condition as new coins, then sell them for a larger markup. So they tell you, well, they're fresh off the mint. Here, I could charge you more money for them. So I think that's one of the reasons people buy them, because they know they're brand new. So the first month looks very good. But the global demand's going up, and here's a couple interesting stats. This is going to drive the price of silver up, but I want to go into something where I don't think it's going to take off just yet. I mean, I think it's going to do great this year, but I don't think it's going to take off just yet. And the reason I'm saying that, just to cut to the chase, is I keep thinking oil is going to drop back a little bit in the near-term future. That's why I got out of it. It's a guess, but so far it did drop back a little bit. It's closed below 98, so I don't know. I might buy back a little bit tomorrow and do it in pieces. Maybe it's going to drop down more. But usually I don't see silver and oil like take off in different directions. I mean, it'd be really weird if you saw oil like drop like a stone and silver take off in a hard bull market. That typically doesn't happen. That's why I'm thinking some of this stuff that's going to happen with silver might be, at least it have to be some weeks down the road, Barclays, this is an interesting fact about global demand. Barclays Capital estimated that silver coin demand globally hit a record high of 3,800 metric tons in 2011, while U.S. sales hit a record high of 1,240 tons. So people are buying the stuff up. UBS, Union Bank Switzerland, also reported that exchange-traded fund holdings of gold, silver, platinum, and palladium all rose last month. Yeah, because stuff's going up. So traders are probably jumping in there. And they know what's going to happen. Because if elections coming up, every country in the world is going to do some form of QE. There is obviously a great deal more interest in the silver market than probably ever before. It's according to David Morgan. Silver is more affordable than gold. Yeah, that's why average people jump into it. They can afford it. People are coming into the market for all kinds of reasons, although primarily wealth preservation and wealth protection and capital appreciation. So that's common sense, because I know that fact. It's still, I'm sure that's still going on right now. Dollar for dollar, there's just as much money jumping into silver as there is gold, because people can afford it. And what that's going to do? That's going to push that silver-gold ratio down, because of the way to how much money is going into silver. You got 1 ounce of gold and 50 ounces of silver being bought at the same time. That's going to push that ratio down. It's going to have to, because there isn't that much silver out there, and that's just an obvious fact, but it's still going on. This is something I thought, pretty interesting. But, I always take these sites that push gold and silver. Like, in other words, I know the major media doesn't like saying anything about gold and silver. They like to make it look like it's garbage, right? But also, some of the very smartest people don't say this stuff. They don't say, I never hear like the top guys, unless they're keeping their mouth shut, I never hear them say 12,500 ounces. $12,500 an ounce for gold. I don't hear them say that, or even near that. They might say 5,000. Maybe they'll say 8,000, but I don't see them say this high. And this goes on, and I piqued my interest because it started out with this paragraph. The best-known speculator on Wall Street in the 20th century was Jesse Livermore. His business partner was Bert Seligman, whose son Jim Sinclair was able to accurately predict the peak price of gold during the bull market of gold in the 1970s. Now, you take that with, he didn't quite predict it exactly the right year, though, but he predicted pretty close to the right price. But, one thing I read this stuff on Jesse Livermore, but one thing I realized about Jesse Livermore, he didn't write a newsletter. If there was YouTube back in the 20s, or the 30s, he wouldn't have been on YouTube telling you what he was going to do. That is one thing. Well, that's just coming from me. But he wouldn't have been on YouTube telling you what he's going to do, and he wouldn't have had a newsletter, and he wouldn't have subscribers. He kept his cards close to his chest. He never said nothing. Period. Now, I know like he made a lot of money in the stock market crash of 1929. That's where he made the most money, actually. He shorted the market. But then something happened after that, and during the 30s, he lost all his money. Now, it could have been from depression, because maybe he was out to jinx himself because he was depressed. Because people who are depressed do stupid shit to themselves, and maybe want to lose his money. I don't know. You know. But by 1940, he was broke, or semi-broke, because he had, I think, $5 million or something like this in his trusts or something like that. And he killed himself in a public place in a cloakroom in New York. So this guy is now somebody to be totally admired in every way. And I can even tell you about, I picked up a story about the wife. She never liked buying things or spending money on anything that didn't show. So you can figure that type. Well, the house had floors that were crooked or something like that, and they needed to be buttressed up because the floors were sagging, and they had this really expensive one-of-a-kind furniture. So instead of having the floors buttressed up and doing it properly, she had the legs of the tables on this one-of-a-kind antique furniture cut off so they would be level with, level, and where the floor was uneven. So that tells me he had a problem right there with that screwball. But anyway, that's the danger of showing money. But anyway, Jim Sinclair learned a formula from Jesse Livermore. This is, to me, is a big story. But well, let me get back to this part, because he said that he picked the price of gold to go to the 900 mark, and $900 an ounce. But he actually didn't pick the right year, but let me say he picked around the right price, because it went to $850 an ounce. And this is something where if you think you have some really, really good information, and you're thinking it's going to go up to $12,500 an ounce, well, for gold, say for instance, you don't want to sell it that high. You might want to sell it before then. I know you might be kicking yourself if you didn't get it in the right spot, but if you're on the other side of the curve, you're going to be like, oh, I lost money, maybe I should hold on. You know what I mean? And what you'll do is you'll just be holding on because you're seeing it go down, and then you're going to be down, and you're just going to drop like a son of a bitch, and you're going to be done. You're going to be done out of it. So I think some of these guys, too, like when they're making these predictions, they're all playing pump and dump, where they're making extra high predictions, and they're going to be out of it. So, I don't know about this, something being this high, but I mean, I could see $8,000 an ounce, and that's a hell of a lot. And at a 20-to-1 ratio to silver, that's $400 an ounce for silver. So that could possibly be, and maybe even higher for silver. Maybe it'll go down to 15-to-1 or even 10-to-1. Who knows? Now his formula he uses. He says he learned a formula from Jesse Livermore, Jim Sinclair, who learned this from Jesse Livermore, to calculate the peak price of gold at the end of a bull market. His reasoning is as follows: in times of crisis, the price of gold in U.S. dollars always strives to balance the international balance sheet of the United States. In other words, talking about the international debt. So, just to cut to the chase, and I'm not even going to go through the calculation, because it could be, I'm too skeptical about this, all being laid out. But when he's saying that he's trying to balance the balance sheet of the United States with the international debt, he says the price of gold should be reassessed, or market funds, to about $12,500 an ounce. That could be, but I would err on the caution of selling below that price because I think they always, when they put out these articles, and considering where you read them from, you're probably getting a number that's too high. That's just my thought on it. He says, therefore, it's not just a bull market in gold, but there's an epic shift that will lead to the impoverishment of Western countries and the destruction of the middle class population. That I think is going on. The winners will be those people who refuse to refuse paper, precious metals in favor of physical possession of gold and silver. And those people who keep the paper assets will lose in the long run, and the ones that are holding physical are going to be winning in the long run. Now I know this is a story coming out of basically a gold site, but I think there's something to it. But I'm a little skeptical because I also look at how fiat currency first started. The reason the way it came about was pure force. Chinese emperor said, "You will accept this fiat money." Period. And the system didn't work after a while, and it fell apart. Sure, but if you got the force, you can make people say, "Well, you can't use gold, and gold price is going to be set at this." So sometimes I think there's going to be some serious curveballs coming up. And people are talking about $12,500 an ounce for an ounce of gold. But why can't the government just say what it is? Why can't they just say, this is what it's going to be, period? We got an emergency going on. And the vast majority of people would be behind the government if that meant they're going to get free stuff, because they're going to tax your gold basically by forcing you to trade it in at a lower price. And that's one reason I like silver better. And that's another reason I like palladium better than gold, because it's an industrial metal. I think you'd have a market for that no matter what, because the industry is going to set the market. Whereas gold, I think you can really mess with the price on that because it just sits in safes. That's one thing I don't like about that stuff. I know on paper that paper traders still view gold in a correct way, and that it's a precious metal. And they don't view silver as a precious metal, at least as far as paper traders go. They view it as an industrial metal mostly. But I have severe suspicions of some of these astronomical prices, and I don't want to be on the wrong side of things. So I think my plan is, like I said all along, I'm going to hold back some silver. I mean, I see some really big gains. I'll sell, and maybe I'll sell physical and buy back physical. Why not? Why not? I don't think we're going to get to some $100-something. We might get to $100 an ounce, but I mean, as far as like $150 an ounce this year, I don't know. I don't think so. There'd be some serious problems going on if that was the case, and I don't think that's going to happen. I think they got the power to bring it back in. But some of these predictions, I don't like them. And what I think they're doing is they're playing pump and dump. And there's some truth to the fact that anytime you're looking at bullion sites, silver sites, people pushing silver, they're going to give you extra high prices. Now me, I would like to accumulate as much silver as possible, because I think in the long run it's still going to be pretty damn good. But if you see a double or triple price movement where something's going up to $70, $75 an ounce this year, I'd say sell some, wait for a pullback, and go buy back some physical too. Buy back half the physical. I think that's the way I'm going to play it, and take the rest in fiat, hold on to the cash. That's the way I'm going to be playing it. I think we got a long ways to go in this bull market, but I've been hearing so much garbage lately about different things that I got a lot of suspicions about some of these outlandish predictions. And as far as I'm concerned, I don't want to be on the side of the curve where it's going down, because psychologically you could really be holding off waiting for it to, oh, it's going to spring up again, and maybe it's not. Maybe it's not. So, watch that ratio especially. If silver starts getting down, it's coming near the peak when it's getting down to 20 to 1. And it might go to 10 to 1. But, when they're talking about 10 to 1, it might go to 10 to 1 for a day. That's going to be a really tricky maneuver. The point is, what I would do, if it went to 10 to 1 and it dropped like a stone, you might want to buy some back. Not all of it. Just buy some back. That's what I would do.